Beginners don't lose because the market is hard. They lose because they're looking at the wrong things. That's the painful truth nobody tells you. When you first enter trading, think the problem is complexity. You think the market is some giant unpredictable beast that only professionals can tame. So you start searching for tools, indicators, strategies, secret setups. You believe the solution is hidden inside a new setting, a new template, a new combination of lines and colors on your screen. But the market was never hiding from you, just distracted. Beginners chase indicators, stack RSI over MACD, over moving averages over Bollinger Bands. They download templates that look like a rainbow exploded on their chart. They believe that more confirmation means more certainty. But deep down, they're not looking for confirmation. They're looking for comfort. They copy strategies blindly. They watch YouTube videos titled 100% Winning Strategy. They memorize someone else's system, but they never stop to ask, do I actually understand what price is doing? Enter trades too early because they're afraid to miss out. The candle looks strong, feels like it's about to explode. So they jump in, it pulls back, and they panic. They either close early, move their stop loss, or watch it hit their stop exactly before going in their direction. And they sit there thinking, how does this always happen to me? Market speaks in price, in structure, in rejection, in momentum shifts. But beginners don't learn that language. Instead, try to decode the market using tools that lag behind what already happened. Let me ask you something. Have you ever entered a trade and it instantly reversed, as if the market was waiting for you specifically to click buy or sell? Have you ever been stopped out and then watched the market move perfectly in your original direction? Your bias wasn't completely wrong, but your timing was, and you blamed bad luck or manipulation or smart money hunting stops. But what if I told you it's not bad luck? A candle you ignored. The market leaves clues before every big move. Not magical signals, not secret algorithms, clues. And those clues are inside a single candle. Before the explosion is hesitation. Before the reversal, there is rejection. Before the breakout, there is compression. The problem is beginners are trained to focus on what already happened. They wait for confirmation after the move has already started. They buy when the candle is big and green. They sell when the candle is big and red. But big candles are often emotional candles, and emotional candles are often traps. Think about your last losing trade. You probably saw momentum building, you saw candles closing strong, you felt urgency, and that urgency made you click. You weren't reading the candle, you were reacting to it. There's a difference. A candle is not just red or green, it's a story. It tells you where buyers stepped in, sellers lost strength, where pressure shifted, where indecision formed. But beginners only see color. Green means buy, red means sell. That's not analysis, that's impulse. And impulse is expensive. Here's the deeper truth. You don't lose because your strategy doesn't work. You lose because you enter at emotional prices. You enter at obvious levels. Everyone else is entering after the move feels safe. But safe in trading usually means late. And late entries create tight stops. Tight stops get hunted by normal pullbacks. Pullbacks feel like manipulation, but they're just structure. The market breathes. It retraces. It tests liquidity. It clears weak hands. And beginners are almost always the weak hands, because they're foolish, but because they're impatient. They enter before confirmation is complete or after the move is already extended. Both are emotional decisions. The market leaves clues before every big move, and those clues are inside a single candle. Then the real question is not what indicator should I use. The real question is, what is this candle telling me right now? Is it showing strength or just excitement? Is it closing with conviction or leaving a wick that reveals hidden pressure? Beginners never ask those questions. They scroll through time frames, adjust settings, search for confirmation from 3 different indicators. The answer was sitting inside one candle the entire time, one candle that showed rejection at a key level, one candle that closed weak despite looking strong mid-move. And you ignored it, because you're incapable, but because you were never trained to slow down and observe. Trading punishes speed. It rewards patience. Consistency doesn't come from finding the perfect strategy. It comes from learning how to read what's already in front of you. And what's in front of you is price. Raw, unfiltered, honest. Indicators interpret price. Candles are price. When you truly understand a candle, its body, its wick, its close, its context, you stop reacting emotionally. You start observing objectively. That shift alone changes everything. You begin to notice when momentum is weakening. You begin to notice when breakouts lack follow-through. Random stop-outs don't feel random anymore. Instant reversals don't feel personal anymore. They feel logical. You were never losing because the market is impossible. You were losing because you were focused on noise instead of signals. You were reacting to candles instead of reading them. And until you fix that, you'll keep thinking the problem is the system when the real problem was what you chose to see. Here's the uncomfortable truth. Most traders trade excitement, not confirmation. Say they wait for confirmation. They believe they're patient. They tell themselves they're disciplined. But the moment price starts moving fast, discipline disappears. Speed triggers emotion, and emotion overrides logic. Think about what usually happens. Price has been consolidating under resistance. Small candles, tight structure, nothing dramatic. Suddenly a big green candle explodes through resistance. It looks powerful. It looks decisive. Your heart rate increases. You think, this is the breakout. And without realizing it, you're not analyzing anymore. You're reacting. Most traders enter on breakout candles blindly. They see the candle close strong above resistance and click buy instantly. Wait for a retest. They don't check higher time frame structure. They just see green and green feels safe. But big breakout candles are often fueled by late buyers. Most emotional traders in the market, the ones afraid to miss out, the ones chasing confirmation. Smart money doesn't trade emotion. Smart money trades logic. And logic says this: everyone is buying at the same obvious breakout level. Who is providing liquidity on the other side? Because every buy order needs a sell order. When that huge green candle breaks resistance, see strength. Professionals see liquidity. Here's the scenario that probably feels familiar. Price approaches a well-respected resistance level. It has rejected here multiple times. Finally, buyers push through. The candle closes strong above resistance. Social media lights up. Breakout confirmed. But beginners don't wait for a pullback. They buy the breakout candle itself, entering the top because they're scared price will run without them. For a brief moment, they're in profit. That tiny bit of green reinforces their belief. I was right. Then the next candle stalls. It starts pulling back. Red begins to form. Doubt creeps in. The candle continues downward. Panic sets in. Some hold hoping for a bounce. Some close early. Others move their stop lower. And then snap. Stops get hit. Liquidity is cleared. The breakout buyers are out, emotionally drained, convinced they were manipulated. Something interesting happens. After the stop hunt, after the liquidity grab, after weak hands are removed, price reverses back up slowly, then with structure, then with real momentum, continuing in the original breakout direction. The move they predicted finally happens, just without them. And they sit there thinking, the market is rigged. But it wasn't rigged, structured. Breakout candles attract emotional traders. Emotional traders place tight stops below obvious levels. Those stops create liquidity pools. Liquidity pools attract larger players who need that liquidity to enter bigger positions. So price pulls back, stops get triggered, liquidity is absorbed, then the real move begins. Market doesn't manipulate individuals. It simply moves toward where emotions have clustered. Big candles represent climax, imbalance, the moment where retail participation spikes. Smart money rarely enters on emotional spikes. They enter on logic, on structure, on confirmation that shows controlled strength, not explosive emotion. Beginners want certainty, and big candles feel certain, but strong closes don't guarantee continuation. Context does. Where did the candle close relative to structure? Did it leave a wick showing rejection? There room to the next level, or are you buying directly into resistance? Most beginners never ask these questions. They see size, speed, color, and they react. That's the beginner trap. Beginners waited for just one more candle. If they pause for just a little confirmation beyond emotion, many bad trades would never happen. But impatience whispers louder than logic, and so they keep wondering why consistency feels out of reach, because they're trading feelings while professionals are trading behavior. Here's the rule that changes everything. Trust a candle alone. Trust the reaction after it. A candle shows intention. The next candle shows truth. And that difference separates emotional traders from consistent ones. Candle is a message. Confirmation comes after the message. And confirmation comes from three things: the next candle, the location at support or resistance, and the volume behavior. Without those, you're guessing. With those, you're reading. There are three candle types you must understand. A rejection candle has a long wick and a small body. Shows that price tried to move in one direction and failed. A long upper wick means buyers pushed price up, but sellers forced it back down. A long lower wick means sellers pushed price down, but buyers rejected it strongly. That wick is proof of a battle. But beginners see rejection and immediately enter, thinking it means reversal. Sometimes rejection is just temporary profit-taking. Sometimes it's only a pause before continuation. What matters is the next candle. If you see a bullish rejection at support, does the next candle close strong and hold above the level? Yes, now you have confirmation. If the next candle closes weak, the rejection meant nothing. Breakout candles trap beginners the most. Large bodies, strong closes beyond key levels. They look confident and feel safe. But they attract attention, trigger fear of missing out, create urgency. When price breaks a level with a strong candle, beginners buy instantly. Professionals ask one question: will the next candle hold? Real breakouts don't just break levels. They sustain above them. If the next candle falls back inside the range, the breakout was likely a trap. Waiting for one candle of confirmation eliminates many fake moves. Yes, you enter slightly later, but consistency matters more than perfection. Indecision candles have small bodies and wicks on both sides. No clear dominance. Beginners dislike indecision, movement. But indecision at key levels is powerful information. If price reaches resistance and forms indecision, buyers may be struggling. The next candle decides direction. Indecision says something is shifting. The next candle tells you what shifted. Location amplifies everything. A rejection candle in the middle of nowhere is weak. Rejection candle at major support is powerful. Volume adds another layer. A strong candle with weak volume is suspicious. A strong candle with increasing volume is more reliable. Context is everything, and context is built from reaction. Most traders react to what just happened. Consistent traders observe what happens next. Instead of chasing, wait. Instead of predicting, confirm. Because confirmation builds logical confidence. Logical confidence doesn't panic when price pulls back slightly, because the entry wasn't based on excitement, based on validation. The candle is the message. The next candle is the confirmation. If you follow that rule, emotional entries reduce, fake breakouts decrease, patience increases, and consistency becomes possible. Smart money does not rush. It does not chase. It does not react emotionally to movement. Smart money waits, and that's what makes it powerful. Beginners believe success comes from being fast. But professionals understand something different. Patience is a weapon. While beginners are clicking, smart money is observing. Beginners are chasing breakout candles. Smart money is waiting for reaction. Markets move from liquidity to liquidity. Price moves toward areas where orders exist. Stop losses, pending orders, breakout traders, panic sellers. All of that is liquidity. And who creates most of that liquidity? Emotional traders. When beginners rush into breakout candles, place tight stops below obvious levels. When they panic sell red candles, they place stops above obvious highs. That predictable behavior becomes fuel. Smart money doesn't manipulate anything. It simply understands behavior. Price often pulls back just enough to trigger those stops, not because the market is evil, because liquidity must be collected before continuation. Large positions require liquidity, and liquidity lives where emotional traders place their stops. If you rush entries, you become liquidity. If you wait for confirmation, you align with structure. That's why patience is power. Instead of asking how do I catch the move early, asking how do I enter when probability is highest. Early entries feel exciting. Confirmed entries feel boring. Boring builds accounts. Exciting destroys them. Price reaches a key level, observe three things. First, where is price reacting? Location matters more than emotion. A strong candle in random space means little. Strong reaction at a key level means something. Second, what does the candle show? Rejection, momentum, or indecision? But remember, the candle is only the message. Third, did the next candle confirm? Did it hold the level? Did it continue with strength? If there is no confirmation, there is no trade. Thinking like smart money means you are not trying to predict. You are trying to observe reaction. You are not trying to be first. You are trying to be aligned. You are not trying to trade every move. You are trying to trade clear moves. Clarity only comes after reaction. Now it's time to turn everything into action. Knowledge without application changes nothing. Step 1. Mark support and resistance. Before thinking about entering, identify where price is likely to react. Clear levels where price previously rejected, where structure shifted, where buyers or sellers showed strength. Price is not near a meaningful level. There is no reason to act. No level, no edge, no trade. Step 2. Wait for a reaction candle. When price reaches your level, don't jump in. How price behaves. Does it reject with a long wick? Does it show strong momentum? Does it hesitate with indecision? Let the candle send its message. But a message is not confirmation, information. And information requires patience. Step 3. Wait for the confirmation candle. This is where most traders fail. They see reaction and rush. It's a rejection candle at support. Does the next candle close bullish and hold above the level? If it's a breakout candle, does the next candle sustain beyond the level? If the answer is no, no trade. This single filter eliminates countless bad entries. Step 4. Enter with risk control. Even confirmed setups can fail. Your stop loss must be logical, beyond structure, not based on fear. Your position size must be controlled, small enough that one loss doesn't shake your psychology. Consistency is not about winning every trade. It's about surviving long enough for probability to work in your favor. Beginners react fast, trade emotionally, and fear missing out more than they fear losing money. Disciplined traders wait, observe without pressure, and strike only when confirmation appears. Beginners want to be early. Disciplined traders want to be right. Beginners feel stressed during trades. Disciplined traders feel calm because their entry was validated. This is the shift from reaction to observation, from excitement to structure, from guessing to confirming. It does not reward speed. It rewards understanding. It does not reward emotion. It rewards patience. It does not reward prediction. It rewards confirmation. If you slow down and follow this routine every single time, your trades become fewer but cleaner. Your losses become smaller. Your confidence grows stronger. Your decisions become intentional instead of impulsive. And over time, consistency replaces chaos because you stopped fighting the market and started listening to it. The candle is the message. The reaction is the truth. And when you master that, you stop being liquidity. You stop being trapped. You stop blaming luck. You start trading with clarity, with control, with purpose. And that is where real transformation begins. From today forward, you don't rush candles. You read them. You don't chase breakouts. You confirm them. You don't trade emotion. You trade reaction. One candle can change your trading, but only if you respect it. And once you do, the market stops feeling like an enemy and starts becoming a language you finally understand.